well. But with that, we'll move on and talk about the first management on the show today. Delhi-based premium real estate developer has clocked sales worth 350 crore rupees for its recently launched luxury residential project. The project has a potential of 900 crore rupees with a saleable area of 5 lakh square feet. This is TARC that I'm talking about. The 2022 sales price appreciated by almost 25%. That's what the company says. To discuss the demand and business outlook, we are now joined by Amar Sarin, who is the MD and CEO at the company as well. Amar, good afternoon. Thank you so much for joining us. Well, I wanted to speak to you about this project where you executed sales worth 350 crore rupees. Can you tell us what is the timeline in terms of the rest of the project that is still to be sold? What kind of realizations are you looking at? Because I was just calculating, it is more than 1 lakh per square feet. So what kind of pricing are you seeing here?
Thank you for having me on the show. This is a project that we recently launched in October. It's a Delhi-centric project, very near to the airport. We have a total development area of 500,000 square feet over here, and we'll be clocking sales of between 900 to 1,000 crores from this project itself. Like I said, from October, we've already sold 40% of the project with 2 price increases. We launched at 15,000 rupees a square feet. We're already around the 20,000 number, and gradually going down this whole calendar year, which is looking very promising. We're looking at price increases as well as good sales velocity in all our projects, but this one particularly so.
Okay, well, Amar, hi, welcome to the show. I was just reading about the project. It is a gated community, 7D security, indoor heated pool, terrace area with an open air theatre, meditation deck. It almost sounds too tempting. But, Amar, I just wanted to get an idea because you said around 40% is sold. So you have 60% remaining. You've taken 2 price hikes. You're at around 20,000 rupees per square foot currently. You have the potential to go higher. So tell us what the 60% would entail. When do we expect it to be completed? What is the likely sale rate that we could see and by when?
So on an average, we'll be around 22,000 for this project at a minimum. We're looking, like I said earlier, we're looking at selling everything over the next 12 months. The project we just started the construction 3 months ago. We're looking at completing it over the next 3 years. It's, like I said, it's one-of-a-kind project. We have the best amenities, the best specifications for all our customers over here. I think it's going to be one of the finest projects in New Delhi. Like our other land bank, most of our projects are in New Delhi, with a few in Gurgaon. But this one being a Delhi-centric project, I think we have a lot of demand actually, from NRIs based in Dubai, Singapore, as well as the UK. Also, we're getting a lot of demand from HNIs in the city, and also, satellite towns around Delhi.
Right. Amar, I get your point that you are going to, sell the remainder in the next 12 months itself. You have strong demand coming in from all the players, etc. But just as far as your company's business is concerned, I just wanted to understand, you saw a rating downgrade on your NCDs recently. What led to this? Can you tell us what the outstanding debt on your books is, and what will it look like by the end of this year?
So we had Bain Capital, invest in our company to a total of 1,330 crores earlier in this year. This happens to be actually the largest transaction in the North Indian real estate market. They saw the potential in our assets. They saw the potential in our developments. They invested. The total, when they came in, basically this money was for taking over all our debt and also giving us money for growth. So this was growth capital as well as capital for our projects. The recent downgrade was, nothing else but old SEBI penalty, small SEBI penalty of 10 lakhs, which was implied on us from the year 2018. And the rating agency had an automatic formula for downgrading us. But having said that, we've already prepaid roughly 70 crores, which was supposed to be paid in the next year, which is 2023 September. We've already started prepaying all our NCDs, and we are looking to prepay much ahead of time. And this is all coming from, the robust sales.
Absolute
velocity.
debt, Amar. What is the absolute debt on your books right now, both long and short term?
So it'll be close to 1150 to 1200 crores
Okay.
of total.
Okay, so 1150 to 1200 crores is the debt, and any debt reduction plans, because you are anticipating some money to come in from the government as well. What are those receivables, and how much will the debt reduce by after that actually comes in?
So we are looking, as a company, we're looking to come to, a number of maybe 500 crores over the next 18 months on the total debt reduction. So, to look at roughly 700 crores of debt reduction over the next 18 months. And then our debt, which will be left to roughly 500, will be basically, just project-specific debt, which is all going to be paid from the sales and receivables from all our projects.
Okay. Just a quick two-part question. This voluntary prepayment of your NCDs, Amar, when do you expect to complete it by? One. And two, while Sonal mentioned that you do have receivables from the government, you have also indicated plans to monetize non-core assets. These two parts, if you could just, provide some perspective on it.
Of course. So as a company, we have three main avenues, for our sources of money coming in. One is the government receivables, which is totaling to roughly 500 crores, which is expected over the next 18 months at the most. Apart from that, we are also looking at land monetization. We just did a big land monetization where we sold our warehousing portfolio to Blackstone and another ESR logistic company called ESR. This was totaling to 400 crores, which we just completed in the last year. So we are also looking at similar land monetizations. And apart from this, the main focus, which we are focusing on our residential portfolio right now. We're looking to launch three projects, which one is already launched. We just delivered a project with the 800 apartments. And the total sale from these three projects itself is going to be roughly 5,500 crores, which are going to be launched in this calendar year, 2023.
So what does that do to your bookings target then? FY23 so far, if I look at it, you've done close to 400 already with 350 crores coming in from this. First half was around 117 odd crores. You intend to monetize the remaining 60% as well in the next 12 months. What are your booking targets for FY24 and 25?
So for 24, we'll be doing between 1,500 to 2,000 crores for financial 24, and at a minimum 2,500 crores the following year.
Okay, all right, Amar, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is a north-focused real estate company talking about luxury sales, which have done quite well for the company. 350 odd crores is what they've clocked in already. It is the potential of 900 odd crores. They have debt of over 1,000 crores on their books on a consolidated basis, looking to prepay some NCDs as well. That's TARC for you, stock down around 2%. Time for a short break, but up next we'll be discussing really what is one of the big stocks of the day, TCS. Reema will be joining in to focus on the numbers. The company released its quarterly numbers last evening. Stay tuned.